I'm Pastor Aaron Harris, and this video is about low risk investing. And in this video, I'm going to guide you on how to make safe investments and not risk losing your money. In a world where everyone is trying to get rich quick, this video is going to tell you what everyone should know about low risk investments, because when you begin gaining wealth, you should definitely use this as one of your tools to be able to grow your wealth even more. But before we get started, I have to debunk a myth. The myth is the low risk, high reward. There are many people out there that will tell you that there are investment options that are very low risk and give you a very high reward, a very high ROI, or return on your investments. And I want you to know that if it sounds too good to be true, then it most likely is. So what you should do is you should run as fast as you can, because people that will sit there and tell you that you could invest in something and it's very low risk and is guaranteed to make you a ton of money, usually it's a lie. And it often comes from people who are going to get a commission off of the decision that you make. For example, they'll say, "Oh, I want you to invest with me with this life insurance option. It's very low risk and it's very high reward." Or, "Oh, I want you to invest in this new thing that we just discovered. It's guaranteed to go up by 1,000%. It's very low risk and it's very high reward." Whenever someone tells you this, that you need to run as fast as you can. So this video is not about low risk, high reward. Instead, it's about how you can use low risk investments to be able to maintain your wealth and to be able to grow your wealth. Whenever you invest money, there is some level of risk involved, but low risk investments are as close as you will get to guaranteed return on investments for your money. There are many reasons that people choose low risk investments, but I'm going to tell you the top 4 reasons why low risk investments should be on your priority list to learn about and use it as a tool. The first reason that you should invest in low risk investments is because it is a good option for anyone who does not want to lose money. And so when you invest in moderate risk investment or high risk investments, what happens is those fluctuate. Moderate risk investments usually go up over a period of time. But if you are investing for a short period of time, only a few months or a year or two, then it would be best that you put your money in short risk investments. That way you know that it's going to go up over time. You don't want to invest your money in something like an index fund or mutual fund for 6 months or a year, and then when you want to take your money out, it may have a sharp decline or a dip. Instead, you can put your money in safe, low risk investments where you know you're going to get a pretty much guaranteed return on your investments. The second reason that you should invest in low risk investments is because it is an alternative to your savings account. If you have a ton of money in savings, then usually a traditional bank account or savings account is going to give you less than 1% interest or return on your investment. And so if your money is sitting there and it's not making money, then really it's losing money, because inflation is going to increase at a pace that outpaces the amount of money you're getting in a traditional bank account. So if you have just a large sum of money that sits in a bank account for an emergency fund, or just sits there to make you feel good in case you ever need it, it helps you to feel safe, like it gives you a safety net, then what you can do is you can turn that money over to a low risk investment option, and you could get 2 to 6% rate of return or on your investment. The fourth reason you should invest in low risk investments is because it helps you to maintain what you already have. Many people focus on building wealth, But once you've built a certain amount of wealth or money, then you have to look at securing it, maintaining it, and making sure that you do not lose it. For example, my grandmother, when she talks about investing, she always tells me, I don't want to lose any money. I don't want to risk it in an index fund or a mutual fund or somewhere where it's high risk in an individual stock or cryptocurrency. Instead, what she says is, I want to put my money somewhere safe, somewhere where I know that it's going to be there when I look for it. So, a good thing about a low risk investment is that you're able to help maintain what you have and to outpace inflation. Low risk investments usually grow at a rate between 2% and 6% annually, which outpaces inflation. Usually, they want you to keep your money with them for a certain period of time. Here are some various ways that you can invest in low risk investments. One of them is a government bond, and that's where you can go and make an agreement with the government where you give them a certain amount of money. Usually there's a minimum amount, $1,000, $5,000, $10,000, and they hold your money for a certain period of time. And when that time is up, then they will give you interest on the money that they gave you. And it's always a set amount. Similar to government bonds, there's corporate bonds where you can go and you can invest your money with a company that will give you a guaranteed certain amount of money at a certain period of time. So if you invest $10,000 with a corporate company, then they'll say, hey, after 2 years, we'll give you 4% interest on the money that you gave us. Similarly, you can do a certificate of deposit with a bank where you give the bank the money and the bank will offer you a certificate. And after a certain period of time, then you can go back and you can recover that interest. You can have a money market fund, which is like a low risk mutual fund that grows steadily, or you can have a money market account, which is usually at a bank or a credit union. And they'll tell you, if you leave your money here with me for a certain period of time, then we'll give you 4% interest or a certain amount of money. And usually, the longer you leave it in, the more money they give you. And they also have high yield savings accounts, which does the same things, where you put your money in there for a certain period of time, and then later you're able to take it out and get a certain percentage return on your investment. The reason you have these low risk investment options is because they believe that if you put your money with them, that they'll be able to take your money and make money off of your money. For example, when you lend your money to a bank, what they will do is they will turn around and they will give a loan to a person or they'll give a loan to a business. And so they may offer you 3%, and then they may go give a car loan that's 6%. So they're making up the difference and receiving that money. So they're taking your money and they're going to make money with your money. That's why low risk investments are not the best long term option, but they are good if you want to secure the money that you have. Low risk investments are best for people who may be going into retirement, about to retire, or already retired, or people who have a ton of money and they just want to maintain and slowly build what they have. It's not good necessarily for someone who is looking at building out a retirement 20 or 30 years from now. Those people should go and invest in moderate risk investments. But low risk investments are really good if you have just a certain amount of money sitting by and you really don't want to risk it in mutual funds or index funds or the stock markets, or you don't really see any investments that you want to put them in, then just instead of letting them sit there in a bank account collect dust, get more less than 1% interest, then what you should do is you should find a low risk way of going and investing that money. For example, me and my wife, we have a emergency fund, and so what we do with our emergency fund is we put it in a high yield savings account for a certain period of time so that it is growing interest over time so that our money is making money. So if you learned something from this video about low risk investments, then you should watch my next two videos, which will be about moderate risk investments and high risk investments, so that you can know what you need to know to make informed decisions to choose the investment option that is best for you.